three.
Hi everybody, this is Ken Winans and Stephanie Larson from Winans Investments, and you are seeing our first recording from our new headquarters in Las Vegas, in a beautiful area in the Summerlin area, in an area called Tivoli Village. So hopefully when you all come to visit us sometime, we'll show you around. But we haven't had a video since the end of earnings season, and Steph and I thought it'd be a good time to catch up with everybody since there's been quite a bit of news and volatility in the markets and stuff. So I think, let me go ahead and get started. Okay. So first off, I distinctly remember in 2017, 2018, there was a lot of talk about tariffs, and there's a lot of talk about reallocating or renegotiating relationships with various countries. And there was also a lot of market volatility. As it turned out, those ended up being buying opportunities. And we are right now following or putting history in the driver's seat a bit to say that we're still buying the dips. Mm-hmm. Now, with that being said, we also have to remember we had 2 previous years that were north of 20% in overall return. There was also volatility during those years. Sure. Also, let's not mention what happened in 2022. So what I can tell you is that I think the leadership is going to change. We've already made rotations into those areas like financial. A lot of you will notice you have a lot of financial stocks in your portfolio, and also a lot of preferred stocks, which are income plays that are also in the financial space. So, but we have been very active in the portfolios. We're very clear that things can, all bull markets come to an end at some point in time. We're aware of that, and we have a strategy in place for it. But right now, as I said, we're buying the dips. Steph?
Yeah, it's been a very volatile few weeks. We're very aware of that. I would like to say that I've had multiple in the double digits of clients that have reached out. They're very concerned with what's going on. They want to know that we're on top of it. I'm happy to say that we are ahead of the market right now. So even though you see big scary headlines and news, that doesn't necessarily translate one-to-one to your portfolio. So be very aware of that. You'll also see that Ken's right. We've been extremely aggressive in our rotations and the way that we have moved the money around in the portfolios and reallocated. We're not resting on our laurels by any means whatsoever. We want to protect the portfolios. We actually have the hedge ready to go to put it in if we feel like this is going to capitulate and go down even further. What we talked about last time is that really the trend hadn't broken in the S&P, and I'd still argue that it hasn't, but it has looked like we've moved into a little bit of a channel. So we're just trying to see what the leadership does, what the market's going to do, and we're very aware of what's going on both economically, geopolitically, and I know that there's a lot of people that are concerned about it, and just know that we're very aware of what's happening, even amongst the tariffs, and we were literally just talking about that this morning. The tariffs play into a little bit of the leadership change of the market. And that's why we've been pretty aggressive in not getting caught behind the 8 ball. Mm-hmm. And we were talking about this and debating it earlier about the AI play. I mean, I hesitate to say the AI play is dead, but it's definitely slowing down, and it's not going to be the leadership anymore. And that's just a fact. So we are adjusting accordingly in response to what the market's giving us.
And also, I did another thing too. There's a phrase called a stock picker's market, and you're going to find as we go through earnings season in the first quarter, there are clearly companies that have already pivoted very appropriately for the change in economic situations. They've already moved where they need to go, and so you're going to find even within retailers, you're going to find some retailers have done a very good job. They already have their inventories, they're already prepared, and others are behind the 8 ball or have actually gone out of business. I know that earlier this week, Forever 21 is closing its doors. So the point is that we're going to have more of this kind of stuff going on. A couple other quick things I would bring up. Again, for people who have concerns about inflation, one of the reasons I'm actually optimistic about, although we will have inflation for the foreseeable future, the dollar is still very, very strong. And as long as you have a currency, and for any of you planning a summer vacation, you might find you're getting some pretty good deals right now. The dollar is actually really, really strong. So the point is, when you have a strong dollar, you don't see inflation vaulting out of control. It doesn't mean it disappears. It just means it doesn't take off on you.
Yeah, I would also say, you know, economically speaking, one of the things that I've been paying attention to, I've said it on multiple videos, is the labor market. It's a huge driver for our economy. That softening a little bit is something that we are very aware of what's happening. So that's been a trigger for me, a little bit of a red line. We want to make sure that the labor market continues to grow because it will affect GDP demonstrably, right?
And as we know, there's adjustments in the staff count at the government level, public level.
Of course.
You know, many of you ask me what keeps me up at night or what I worry about, and it's an area that we're not necessarily in. As you know, we buy corporate bonds and corporate preferreds and our income, but actually it's the very, very high level of debt at the municipal level, the various state levels. Remember, as I point out in my Forbes article last October, states can't issue currency, states can't print money, but yet they have debt levels, many of them have debt levels that are actually higher than the United States itself. So if you ask me of an area that we're going to, I think, begin hearing a lot more about over the next couple of years, it's going to be, I hate to say California being one of them, Illinois, New York are some of the states that I think are going to be having to make some serious adjustments on their spending habits.
But that's why we play in the fixed income space that we play in. You know, we we are in the corporate bonds for a reason. I'll actually say some of the vacillations that have happened with the Fed and political changes, to be honest, has actually made a great buying opportunity for bonds. I haven't seen yields like this since 2020. For the first time, and you'll notice in your accounts, if you needed paper, I was really aggressive today. I'm seeing paper with yield maturities at 8.5. I'm trying to buy every single thing I can get my hands on right now and fill up all the portfolios as fast as I can before it moves back away. I mean, the best I was getting even a month ago was maybe 6.5, 7. And that took like a lot of work and a lot of digging to find that. So I'm really happy to see this, like, kind of, even if it's just a momentary buying opportunity, it is a buying opportunity. And on the preferred side as well. So we've been adding a lot to the preferreds and portfolios. So I'm very happy, and that has actually really helped to stabilize the portfolios. If you're in a blend, you'll notice you're not feeling the market impact as much as if you're all equity.
Yeah, no, I think at the end of the day, you're hearing about all these scary volatile moves in the stock market. As Stephanie said, we do not believe in looking at your portfolio day in and day out. This is not excuse the pun, this is not a slot machine. This is not gambling, and there is volatility, and there's going to be adjustments for the foreseeable future. I want to shift gears here real quick. So people have been asking about the changes in our offices, and unfortunately there's been some inaccurate information. We continue to have an office in Novato. Stephanie lives in Novato, raising her kids there. Her husband's a firefighter there. She's not going anywhere.
And actually, I've had several local clients reach out and say they're thrilled that we're maintaining an office there, that it's not changing anytime at all, but the headquarters has moved here.
Yes. And also our business has grown. As many of you know, we're one of the world's top money managers. And so we have clients all over the place. So a bulk of our clients have moved to places like Las Vegas, but we also have a lot of clients in Southern California. So we made a decision to move the headquarters to better fit the fact that we have clients all over, and we wanted to be in a more centralized location. So with that being said, so Steph and Amy McGovern are still going to be in Novato. We do have a person after a 45-year career working in financial services. Mindy Spence has retired.
And she is very happy with it.
I'm sure she's very happy right now.
She has earned that retirement.
She has. She's been through, she and I had lots of talks about things, but we wanted to introduce you to her replacement. Alana.
Some of you guys might have actually spoken to her or at least met her over email. So Alana has graciously joined this team, and we're so happy to have her. So,
yes.
You want to say something?
Yeah, hello everyone. I know I already spoke to some of you over the phone. I appreciate all your warm welcomes so far. To everyone else I haven't yet spoken with, I look forward to getting to know each and every one of you in the future. So, yeah.
And just so you all know, Alana was near the top of her class at Sacramento State in a degree in finance, right?
Yeah.
She also passed her Series 65 license, which is not easy to get, so we're very proud of her. And then just also, so Alana works with me in Vegas, and also Brittany. Many of you guys know Brittany Jerez. She moved to Las Vegas as well. So we have 3 of us here. We have 2 of us in Novato. And obviously, I'll be coming back and forth in all those other parts.
And obviously,
She's
I'll
coming
be
here.
back and forth.
So, yeah, so
the
just-
continuity of the
Yeah,
business.
so just so you all know, there's plenty of us to spread around, so we're in good shape. So listen, we wanted to keep it short. Look, we know it's the beginning of a year. I mean, there's a lot of emotion right now. There's a lot of headlines, a lot of divisive opinions in both directions. Just we're here, we're working, and we work through it. And please call. You know, like certainly, if any of you are going to be in Las Vegas, we're actually going to do a ribbon cutting at the headquarters here in the next couple of weeks. So if you're looking for a reason to come to Vegas, and hey, by the way, I'm not an accountant, but if you come to visit your investment advisor, I think it's a tax write-off. So anyway, you might want to think about coming out here and seeing us. We'd love to see you all, and we'll hopefully we'll do another video probably in about a month.
Yeah, the next time I'll be in town for the ribbon cutting, we'll try to do a quick one then if we can, and if not, the next time we will do that for sure. And I just wanted to say really quick, believe it or not, I can't believe it's March. So quarter end will be happening soon in a few weeks. So if you're concerned about your portfolio, don't worry, your overviews will be coming. A lot of people took us up on the offer to do allocation changes after our last video. If you really do have some concerns with what's going on and this is just a little bit too much for your comfort level, maybe that's your sign that you should do an allocation change and be a little bit more conservative. Happy to have that phone call with you anytime if you want to discuss it.
And one other quick thing, we all know tax season is coming up very shortly.
Yes.
For some of you who are, because we did take some profits last year, especially, and thank goodness we did, in some of the really high-flying stocks, we were going to encourage some of you really stress about where am I going to get the money to pay these tax bills. Don't forget, many of you in your taxable accounts have a margin ability, meaning you can borrow against the equity in your account. So you don't have to worry about telling Steph and I, hey, hurry up and sell, I got to pay the IRS or the state of California or whomever. You can directly write a check, it will show up as a loan in your account, and then we can pay it off over time. So the point is you have flexibility to deal with your tax bills.
And last thing, I do talk to several CPAs. I'm happy to do so and to share information that's required. Just don't ask me on April 14th to do it. Please ask me anytime in the next month. I super appreciate that, and I'm happy to help in any way I can.
Yeah, I mean, April's usually a very busy month for us because we have client taxes, client first quarter reports, we've got earnings coming out. It's very, very busy for us. So anyway, everybody take care. Have a great weekend. We look forward to seeing you in the not distant future.
Bye, guys.
Bye, guys.